Good morning, trading world. It is March 20th, 2023, and this is my pre-market outlook and technical analysis for day trading the markets. The title for today's outlook: the market is still in a blind spot as banks' risk still looms and we wait for the FOMC announcement. Today is a day where you make sure you are okay risk-wise and that you are not exposed too much to the bull side or the bear side, at least coming into this morning. Every day I get up to gather the facts, and based on those biases, I make a decision on what side of the market to trade on. This morning, there is no true bias to follow because they are all over the place. The market feels heavy to me, but a feeling is not enough to base a full position on. So this morning, I found myself looking over accounts, seeing that I have a couple long positions and a few more short positions, and that I am okay with the delta risk I have on right now. Beta weighing my delta risk is a quick and dirty way for the purpose of understanding how much risk I have on, or getting an estimate of how much I can lose or gain based on a move in the market. I am okay with the number that it showed me, so there is nothing for me to do. This is something that we should all know at any given time. If we go up or down 3, 5, even 7%, will you be okay? Maybe if the banks were doing this, we would be okay right now. We wouldn't be in this situation. You should realize that this banking crisis is not really about rates going up, but about the amount of risk the banks had on. Being too deeply positioned in certain bond durations is what got us here. I hinted this all the time, making sure your risk, potential losses, is something you can withstand. The weekly outlook is bullish, meaning closing above the 389.99 with a possible retracement going below 388. There is harmony on the technical side, which is bullish, and the quant side, which is also bullish. I have talked about a bounce building for the last 2 weeks, but that doesn't mean we won't see more flash lows first. That brings us to the key levels of the day. All right, here we are with the key levels to watch for the day. Starting on the resistance side, we have our jack resistance at 390 to 391 area. Queen resistance, we have 392 to the 393 area. These will both be highly important to watch today for rejection. Then we have the king resistance area, 394 to the 397 area. On the support side, we have our jack support at 389 to the 388 area. Queen support 387 to the 385 area, and then king support 384 to the 382 area. The main thesis for today is bearish, at least on the SPY, closing below the 389.99 with a projected target low of between 389 and 383. The alternate thesis is bullish, closing above the 389.99 with a projected target high of between 390 and 397. The main channel we are in is 397 down to 379. The main channel below is 379 down to 364. Last week, market strength and breadth fell off a cliff overnight and pretty much stayed range bound around the lows. I expect strength to open flat, and because of where we are in larger time frame consolidation today, it is truly a flip of the coin day. I see no edge, bullish or bearish today, regardless of what the technical and quants say. We have a clusterfuck between the technical side, which is basically 50-50, a toss-up, and the quant side, which is showing a bearish bias. The reason for the clusterfuck is when things are too close to call, I look to the futures market for guidance because there are more data points to compare. And today the futures market is completely on the opposite end of where the ETF market is in the same instrument, which just confuses things altogether. The futures market has a bullish bias for the day with a harmony between the technical side, which is bullish, and the quant side, which is also bullish. So, I would, if I had to really pick something, I would be looking to get bullish, in which I was. On Friday, I did put on a couple long positions. So I guess if I did have to say it, I would probably be looking to get bullish at some point today. Not right now, not off the open. I would look for the market to kind of play out a bit and look for us to kind of crest into some lows again at some point, and then I would look to try to put on a bullish position or two. But since I've already put on a bullish position, if I can't get it off or even at the open or prior to the open, which seems like it's pretty close to me being able to do right now, which I may consider doing, and then trying to look at things again later in the day for that bullish position. But this is the reason. This is why this is one of them days where I'm likely to kind of hold off or just wait to see. That brings us to the scenarios of the day. All right, here we have our first scenario and most probable, which is going to be our expanded range day structure. We could begin the day with consolidation to the upside. At some point after pushing up and tiring out into resistance, we flash lower before trying to consolidate again and grind up. Again, this is our expanded range day structure. All right. With our second scenario, we have our rounded reversal day type structure. We could get a continued push lower toward the Jack or Queen support area, find midday chop around either the Queen or King support before going back up with the same energy of force we went down with the first part of the day. Again, this is our rounded reversal day type structure. Before I move on to the next scenario, I do want to say there is a chance for us to have a vice versa alert on the rounded reversal day type structure, and that would just mean that we would get something like this where we get a push up or continued push up toward the Jack of Queen resistance area. Find our midday chop around either the Queen or King resistance area, and then spend the second part of the day coming down with the same amount of force that we went up with the first part of the day. So that is the vice versa alert on the rounded reversal day type structure. All right, and our last scenario is our trend day down, which means we open gap down and start with a pushback toward the previous close, here represented by the black line. We find resistance on or before that previous close, then begin the downtrend for the day. We usually find midday chop around either the possible Queen or King support area. And a lot of times, the second part of the day, we usually begin with what looks like a continuation of the primary trend of the morning, but so often turns into a head fake, and we get what seems to be a rally in or toward the close. This is our trend day down day type structure. Also, we need to be on alert for the vice versa scenario as well. And in the vice versa scenario here, we're going to have to get some increased bullish activity before the open, which gets us to open gap up. We get a fade back into the previous close, but find support on or before that previous close represented by the black line, and then we get into our trend up for the morning. We usually find our midday chop around either the possible Queen or King resistance area. And just like in the other scenario, we normally get this look of continuation to continue the primary trend of the morning. So in this case, it would be up, but a lot of times it falls short and is usually just a head fake, and we get kind of a fade back toward the close. So those are the scenarios of the day. Again, I can't beat this drum enough. Your most important job as a trader is to protect the capital that you already have. We do this by knowing and understanding the risk that we have on in each position and managing those risks in accordance to our account size. I can't say it enough. Risk over direction, because in order to stay in the game, you got to have money. And so we always want to do everything we can to protect the money that we have. I hope this helps today. Wishing you a positive trading day. Let's go out and make it a great one.